Oh man, so AFFIRM, the buy now, pay later company, is up 24% in the aftermarket after delivering some great earnings for Q2, which is their fiscal year Q4. Let's take a look at their earnings and some of the highlights to see what is leading AFFIRM to be up 24%. That's staggering in a market which is not taking any prisoners recently. So we can see here it was sat at 92 at close and it's sitting at 114 in the aftermarket, which is massive. So let's take a look at their earnings. So the street were expecting revenue to come in at $225 million. They came in with a beat at $261 million, which is great. And that is up 71% on the same period in 2020, which is how they show their numbers. Now, loss per share was wider than expected. So the street was expecting 29 cents per share, but it came in at 48 cents per share. But remember, for these newer companies, it's very hard to have a comparable estimate. So oftentimes you got to take loss per share or earnings per share for a company with few number of reports with a pinch of salt. So let's look at some of the headlines which they shared. So they said their gross merchandise volume, that's the sum of all the transactions on their system. So if you imagine somebody buys an iPad on buy now, pay later, and the value of the iPad is $1,000, that adds $1,000 to GMV. It's not revenue, it's GMV, which they use as one of their KPIs, okay, which we'll look at in a second. So they're saying this is up 106% on the same period last year. They say if you take out Peloton, that's actually up 178%, okay? Now, impressively, the active merchants are up 29,000, okay? So they got 29,000 active merchants, which is up 4 times from the same period, which is the calendar year Q2 2020, okay, ending June. Now, they say this includes the Shopify merchants, so it seems like they had a massive uptick through onboarding these active merchants on Shopify in a mass partnership. Now, the active customers, which they define as somebody who's had at least one transaction in the last 12 months, is up 97% to 7.1 million. So all looking really good. The market is really excited. And let's take a deeper look into their 8K. Now, what I've done for reference is if I just move me out the way, I'll just hide completely for a second so you can see the numbers. Now, what you can see I've done is at the top, I've pulled in from their Q2 report now, and then underneath this, I put their Q1 report so we can see where they were at the end of March. Okay, so these are their key KPIs. Let's start with active consumers or active customers, same thing. So they were at 5.4. They reported 5.4 in March. That has gone up 31% to 7.1. So very good growth there. Next, let's look at their transactions per active customer, okay? Because we want to see steady growth in this. Now that remained flat at 2.3. This is a slight disappointment. You'd want to see a little bit of growth quarter on quarter on transactions per customer, because you want to see, and we saw this with Robinhood and we look at this with Coinbase, you want to be able to see that they're able to grow the amount they're achieving from each customer. Okay, so that's really important. Now, if we then move on to active merchants, this is where they really got some crazy growth. So you can see 11.5 active merchants, okay? So it took them from June 2020 to March, so it took them 3 quarters to go from 5.7 to 11.5, and then they've done a 1.5x. They've increased by 150% to get to 29,000 merchants, which is massive. And that, I think, is testament to some of the work they've been doing with Shopify merchants, okay? So they've started doing partnerships with Shopify merchants, allowing them to use AFFIRM for their customers to use the buy now, pay later mechanism, okay? Now, you can see that the total platform volume has gone from 4.2 to 4.7, and that's a good sign of some of the KPIs they're achieving. Now, what does that look like from some of the more financial metrics? So first, let's look at GMV. So we mentioned GMV is your gross merchandise volume. Okay, so if you're looking at that, you can see they've just reported that that's come in at 2.5 billion. Okay, so you can see that here, 2.5 billion. That is up from 2.3 at the end of Q1. Okay, so by end of June, they're at 2.5, but they were at 2.3 GMV. That's in billions, by the way. So that's 8% up on Q1, which is some modest growth. Now, total revenue, which is obviously the more important metric, but it is correlated to their GMV, is up 13%. So they were sitting at 230, and they've managed to grow that to 261. To put this into context, for the year ended in, so for the same period, which is the 3 months ending in June in 2020, they did 153, and they've managed to grow that quite impressive, I think 71% to 261. So they're absolutely smashing it from a revenue perspective. Now, a few things I'm trying to get my head around and trying to understand is, how is their revenue makeup changing? How is the mix of revenue changing over time? So we mentioned we want to see them be able to increase the number of transactions per user, and we also want to see them diversify away from transaction costs. Okay, so you can see the total revenue. So before that, let's look at total revenue as a percentage of gross merchandise revenue, right? So just use that example again. So if somebody's buying an iPad through Affirm for $1,000, is it true that as they continue to get more people buying products, so GMV increases, is it true that their revenue is increasing at a greater rate? That's what we want to look at. Do they have the economies that they're making more and more money in revenue as more and more people are buying products from their services? If that's not true, then that could show a potential weakness in the business model. So we can see here, this is what got my attention, was we can see that last year, they made 12.7% in the same period revenue as a percentage of the GMV. So they did 1.2 in GMV, and it spat out 12.7. Okay, so think of this as almost like a gross margin, I guess, in essence. Now, that has kind of dropped to 10.5% on 2.5. So yes, your revenue's gone up 71%, but you would have probably expected it more given the growth in, because revenue grew 71% there, but you can see the GMV more than doubled. Okay, so that's more than 100x increase in GMV. So we want to see that, how that translates through to revenue. The other thing we want to look at is, what are the transaction costs making more and more percentage of their revenue, or less and less? And again, you want to see this diversification. We've spoke about this with Robinhood, with the majority of their income coming in through payment for order flow transaction costs. You want to see them be able to diversify out. You've seen Coinbase do a better job of diversifying their revenue out, and it's no different for this buy now pay later company, Affirm. We want to see them be able to not just rely on the transaction revenues. You want to see them relying on different sources of revenues going forward. So you can see in March, at the end of March, transaction cost was 4.3% of GMV. That's gone up to 4.6% of GMV. So they've managed to bring out some more. Having said that, in the same period, in the Q1 2020, that was as high as 12%. Okay, so it's interesting to see how that fluctuates. We don't seem to have a normal percentage. I mean, you got 7.5% in that period, you got 5.3%, 4.6%, 12% there. So it doesn't seem to be like a normal level of GMV percent that they expect to see in revenue. So we want to see that stabilize out. So what did Affirm share in terms of outlook? So we need to remember two things on this. This assumes no uplift from Amazon, and I think that is such a massive point. So we know one of Affirm's biggest customers, other than Walmart, is Peloton, and we know a lot of their revenue comes from Peloton's transactions. But if you take Peloton and Walmart, Amazon alone dwarfs Peloton plus Walmart in the GMV that this could bring in for Affirm. So it is a massive deal, and the fact that they've not even put that into their outlook and still showing great outlook figures and great Q2 earnings is what has got the market riled up behind Affirm, and this explains the 24% up in the aftermarket. So they've revised various metrics here. So they've revised their GMV outlook from 2.42 billion to 2.52 billion. They revised their revenue from 240 to 250, and I think this is fairly conservative. If they can get even a bit of Amazon revenue in the Q3 period, because I'm assuming they're going to want to start testing something before the Q4 bumper Christmas period, I think this could even be sandbagging almost. I mean, if they deliver 260 plus in Q2, could 250 be them slightly egging it down. But it's good that it's revised up and the market is responding well. So transaction costs they expect to increase. They've revised revenue less transaction costs up as well. So overall, a really good sign. And by the way, this also doesn't assumes no contribution from their debit plus plan. I put debt, but that should be debit plus plan. So there you go, guys. A really strong set of earnings from Affirm. I mean, we spoke about this. If you haven't watched that video, I do a really detailed breakdown on the different players in the buy now, pay later space. From Square, from PayPal, from Visa, from the banks and how they could disrupt the space. I also spoke about Apple and Amazon and how they could disrupt the space. Could Amazon just be using Affirm to learn the industry and then maybe acquire Affirm down the line? Maybe they'll spin up their own buy now, pay later operation. Is this just them getting their feet wet? But whatever it is, you can see that this is a behavioral change in the consumer, which is not going to change. It's obviously not a good personal finance behavior for people to be buying more and more products which they cannot afford. But this is the trend. This is where people are going. And whether I'm not a big fan of it at all. You should only buy what you can afford, but we can't, as investors, you can't deny where things are going, and that's what people are doing. And you've got to be able to observe what it is that people are doing. You can see people have mobile phones which they can't afford, and they pay those monthly. They buy holidays which they can't afford, and they pay that off monthly. Same for their cars. And now it's getting worse and worse with it's soon going to be small ticket items. It's going to be dinners. It's going to be T-shirts. It's going to be socks. I mean, that's just the trend of where it's going. And that's why you're seeing phenomenal growth in Affirm as more and more people want to buy more products, even though they don't have the liquidity to do that. But overall, a great set of earnings for Affirm. All the metrics are heading in the right direction, which is fantastic. Everybody and the market, and particularly Affirm investors, I know a lot of Affirm investors who are taking out hedges and option plays going into these earnings because they really felt the earnings were going to come in weak, given the weakness we saw in Peloton's earnings. And I think that's why the market's responding so well when we saw some good figures coming in, well, some really strong figures coming in and improvements to outlook. And I think that's why it soared up 24%. Again, if you want to add Affirm to your position, it's still something I'm looking at. I'm not going to be chasing it at 24% up. You know that, guys. We'll continue to look at it. I'm still, watching this buy now, pay later space. But it's not clear who the clear winner is going to be. If you go watch my video, you can see there's a lot of really big players. It's not just about Affirm's partner with Amazon. It's a clear run to victory. You've got Square, you've got PayPal. These are companies with big cash buffers beneath them, and they're putting money to this space. I mean, Square acquiring Afterpay for a massive sum of money. They're taking it seriously, and even Visa are taking it seriously. Barclays Bank partnered with Avant. So it's on the radar of all these top companies. So it's not a clear run of who's going to win. Now, the other interesting thing with Affirm to note, if you want to invest in Affirm, it's almost a proxy for investing in Amazon as well. Obviously, Amazon's quite an expensive valuation right now, rightly so. But Affirm is almost a proxy way of you kind of betting on Amazon as well, if you wanted to kind of pick that up. Because now, just like we saw how Peloton was moving the Affirm stock, imagine what Amazon's going to do once they start using Amazon. If Amazon have a great earnings, Affirm's going to move faster and quicker because it has a smaller market cap and it can move quicker on smaller swings with less money to move that stock. So it will be a volatile one. It will move in correlation to Amazon if they can do this rollout successfully. And I think all investors should be aware and cognizant of that. So there you go, guys. That is the update for the calendar year Q2 earnings for Affirm. Thanks for watching. We'll see you in the next one.